Tesla, 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 Tesla. Woo! Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And a lot of you Tesla shills really think I'm mad that Tesla stock is up in the after hours. I don't care in the slightest what Tesla does, okay? It doesn't affect my life in the slightest. But I'll tell you one thing. I'm not buying the stock because I think it's ludicrously overvalued. And I continue to believe that, and I don't care how many great quarters they have. You have to think in common sense. You have to look at things in a practical, common sense way and really consider, is Tesla fairly valued, undervalued, or overvalued? Now, every data, metric, statistic I see tells me that Tesla is massively, massively, massively overvalued. I've said this 1,000 times. It's a luxury car maker. People cannot afford that car unless you're wealthy. The luxury auto market is not nearly as big as you think it is. And there are tons of car companies that are also competing with Tesla. And these car companies produce way more cars. And even if Tesla somehow grows to the size of Toyota or Ford, I can tell you that the current market cap doesn't make sense even at that size of a company. It's ludicrous, okay? So before we get into the charts and data, we're going to go look at the Tesla earnings. La Tesla. Una Tesla, Tesla, Tesla. So here's the Q1 2022 update from La Tesla. Oh yeah, oh yeah, oh yeah. We got some, okay, got blah, 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 blah. So I want to go straight to the financials here, okay? So over here on the right, we have Q1 2022. Now you look, and you can see you have automotive revenues at the top, and then you have total revenues down here, a couple rows down. Now, I say this over and over again. Tesla is a car company. Everybody says they're a robot company, or a software company, or they're a computer on wheels. No, they're a car company. And you know how I know that? You take the automotive revenues, and you divide it by the total revenues. 90% of Tesla's revenue in this latest quarter came from car sales. So don't freaking tell me this is not a car company. Every quarter I do this, and every quarter it seems like more and more of the revenue comes from car sales. You cannot say this is anything other than a car company, okay? So, gross profit, 29%. That's high. You know why it's high? Tesla is extremely popular right now. It's the rage. Elon Musk is popular. He has a cult following. Tesla's popular. It's new, cool, and exciting. Electric cars. That is why the gross margin is high, because Tesla can raise prices astronomically, and all of the well-to-do fanboys can't afford to buy the car. The vast majority of people cannot. And there's going to come a time where there's going to be a ceiling to who can actually afford this car. You can't just continuously sell cars, 10 million, 15 million a year, every year, over and over, and charge the prices that Tesla does. There is a ceiling to Tesla's sales. I don't know what it is. I have no idea what the luxury car market is, but I can tell you, it's not as big as you think it is, and it ain't worth $1 trillion freaking dollars. So, 90% from automotive, 90% of the revenue is automotive. Gross margin, 30%, not bad. Operating margin, 20%, also not bad. Now, I don't look at EBITDA. I don't care about that. I'm an accountant. I mean, whatever. Let's see. Net income attributable to common stockholders GAAP. Generally accepted accounting principle. So the actual bottom line profit margin of La Tesla is 18%. Pretty good, but that's not tech company level of profitability. Not in the slightest. Especially if you consider this profitability is while Tesla is extremely popular in all the hype, and they can raise the prices of their cars. But remember, as competition increases, margins will shrink, because the more you compete, the more you have to slash prices or do this or add more features. Margins just don't grow and grow and grow forever. They will shrink, I guarantee you. Now, let's see what else is on here. Free cash flow. 2 billion? Yeah, 2.2 billion. So, roughly price to free cash flow. So it's $1 trillion. Oh my God, is my calculator even going to freaking take this? Price to free cash flow, we'll call it 12 billion just to be nice. 83 price to free cash flow, roughly. If you like project it into the future, you say, okay, the current market cap times the next 4 quarters, roughly is an 83 price to free cash flow. It's pretty freaking expensive, okay? This car company is insanely overvalued. Price to sales, I don't even freaking know, but it's probably insanely high. Let's see. Total revenue grew 81% year over year to 18.8 billion. Okay, yeah, the car company's very popular and it's a new company. Of course it's going to grow quickly, but that doesn't mean it justifies a $1 trillion market cap. Cash, blah, 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 blah. Okay, so then they go into like production statistics and stuff like that. Now, let's go ahead and look at, what is this, the day after the Super Bowl? Let's go look at some common sense charts. Now, I want you to look at this and consider 2 things. All right, we have the market cap of all the automakers up here. It's a very crappy chart. I know, I'm busy. And then we have revenue by automakers. This is from 2020. It's a little outdated, but I can guarantee you Tesla still ain't close to these automakers. Now, as of today, right now, you see Tesla on the left here? That's Tesla's market cap compared to every other automaker in the world. There's Tesla, over $1 trillion. We got Toyota, 250 billion. Volkswagen, 150 billion. Ford, GM, BMW. Look at how massive Tesla's market cap is compared to all these other companies. Now, you may say, yeah, Tesla's going to take over the world. But if you really think about it, you look at this market cap, and I do this every time, every quarter. You look at this market cap, and you compare it to revenues by automaker. So here we have revenues by automaker in 2020. Volkswagen generated $254 billion of revenue. Toyota, $249 billion. Daimler, $175. Ford, it covered it up, but whatever. General Motors, $122 billion in revenue. And you see a little Tesla down here. $31 billion of revenue. Now, I know you guys probably made a lot of money in Tesla because you bought it because it was going up. And just be honest with yourself. You bought Tesla because you saw it go up and it kept going up and now you think you're a genius. But if you just look at it from a common sense perspective, look at Tesla's revenue compared to all these other automakers and then juxtapose that to the market cap of Tesla versus all the other automakers. It doesn't make sense. It's still a bubble, okay? I don't care what the quarter is. I don't care. Of course they're going to knock it out of the park the next couple quarters. They're all the rave and they're all the hype and they're raising their prices and people are willing to buy it. Will that last forever? No, I don't think so, okay? I don't see it. I just don't see it. I can see them being an established luxury car company, but until they produce a car that is affordable to the masses, I don't see it. And even then, I don't see $1 trillion market cap. So, whatever. Y'all keep buying it. Y'all keep thinking that, you know, I'm jealous. I'm not. I mean, I'm not buying. I could have bought Tesla a long time ago, but I just knew. I'm like, it's a freaking bubble. I mean, that's how stocks work. You can't look at short-term performance and say, oh my God, see, the stock went up. It must be a good company. And the same thing with the stock going down. Now, some stocks are trash, like Tattooed Chef, Smile Direct Club, massively unprofitable, losing money like crazy. They're garbage. Can't really value them. They're worthless. And there's other companies like Tesla that are profitable, but are also massively overvalued because you can be profitable and massively overvalued. But whatever. That's my reaction to Tesla's earnings. I'm going to go to the bar, cry myself to sleep. No, I don't really care. But, I mean, 90% of revenues from autos, massive competition. You compare the market cap to the revenues, it doesn't make sense. And it just doesn't. I don't know. I don't know what to say. Anyway, that's it. Like, subscribe, tell your friends about me, and I'll talk to you later. Tschüss!